Welcome to our eSignal weekly Forex forecast. My name is Jay Norris, and I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we'll cover today will be the Australian US dollar. There you can see the Aussie continued that pretty sharp market slide that we talked about last week. Last week we said overall our overall target here is probably just below 80 even. Let me pan out to a weekly chart. You'll be able to see that a little bit easier. Yeah, we think you got quite a bit of room on the downside, and we think you'll get below 80 even. But 80 even will be a pretty good intermediate, probably a little bit longer term target for this market. Here's a point I want to make though too. You see this pretty big rally. When you see a rally that big in a currency market, it went from 65 all the way to 110, massive rally. There's a reason for that. This move, this overall move, if you go back to that 08, this move is still intact. It's been, if anything, classic corrective behavior, right? Back and forth. So we think that this move down is probably more or less a bona fide correction for this move. That's very, very long term. But when you look at on the daily chart, however, you're still a long ways away from getting in a buy zone, getting to a point where the market's going to start to consolidate and you can consider perhaps a market bottom. I think that's a little bit too long-term thinking. We think that the Australian dollar is a pretty good proxy for the Chinese economy because they do so much business with mainland China down under that we think this is a pretty good proxy for it. And, we're not long-term bears on China by any means. That'd probably be a difficult position to be in, trying to take the other side of China. But we do think that over the near term, intermediate term, that the Aussie dollar's got to work out some kinks. Well, from a short-term perspective, it's got a lot of room on the downside back to a daily chart. And, we'll leave it at this. It's probably a little bit too premature to talk about a potential longer-term bottom below 80 even. So for now, we're just going to focus on the fact that currently what's happening in the market right now, there's a lot of room on the downside for the Aussie. Next market we'll take a look at it would be the dollar Swiss. Dollar Swiss, when you see this back and forth action, these sharp up move, down move, up move, generally that's an indication of some kind of consolidation in the market, some kind of probably even short-term distribution in the market. The dollar Swiss reached our upside target there just above 93 even, but we think there's still room up above. And when a market's starting to consolidate, getting whippy, just ahead of a potential correction, that's when it's trickiest to play. So there's probably we feel there's probably some more room on the upside here. It wouldn't surprise us if you tag 95 even. Here's the really tricky part about these markets right now. You're in the midst of a very long-term breakout. Here's a monthly chart of the dollar Swiss, and that really gives you scope, right? So when you look at that long-term monthly chart, you're thinking, hold on to longs. We think that's the correct way to view it. Hold on to those long-term longs. But as a trader, as a shorter-term trader, certainly you're aware that they haven't repealed the law of gravity here, and they'll be downside, and we feel longer-term that downside will be opportunities to buy dips and short term, there may even come a time when we'll take advantage of the counter trending price action. But for now, we're definitely still in the buy the dip camp. Wouldn't surprise us if in the process of carving out some kind of a consolidation process here that you saw 95 even. Next market, the dollar index. Here's what's significant to us about the dollar index, easier to see on a weekly chart. 2 successive weekly closes above 84 even. Why is 84 even a big level? Well, you couldn't get 2 closes in a row above it. You did have 2 closes above it, which told us, hey, you want to be buying the next dip. Boy, that turned out to be a great trade. But you're really not going to score a breakout until you get those 2 consecutive. Now you have a total of 4 closes above 84 even. That's a pretty big deal. Pan out to the bigger picture. There it is. So there's your breakout in the dollar. No doubt about it. You're going to continue to buy dips in the dollar and focus on that long-term picture and hang on to those hang on to your longer-term long positions. But again, be mindful, similar to the dollar Swiss, that they haven't entirely repealed the law of gravity here. You'll get some play, you'll get some back and forth trade. Euro, US dollar, plenty of room below here. Now, plenty of room below, we should say long term. Shorter term, more intermediate term, we think you will probably see some support down around 127. Similar to resistance at 95 even in the dollar Swiss we are looking at. So it wouldn't surprise us if you started some kind of a consolidation process in that zone, but there's probably still some more downside. You'd probably be better served still selling rallies, even shorter term with the momentum down as it is. Yeah, on the other hand, you get the closer you get to the end of the year, you get on into November, wouldn't surprise us to see some kind of consolidation, even some backup in that in this sell-off. And we think longer term that's just going to be an opportunity to tee off on, an opportunity to sell. Here's the weekly picture. Oh, here's what I wanted to show you too. This move you're looking at right here from the Draghi bottom, that when you take that high to low, you're still in a bull phase here. This move is still bullish overall. This pattern from the 2012 low is still bullish. Really, you'd have to eclipse these levels in here. You probably have to get it closer down to 125 even to be able to reverse that. From a longer term perspective, this pattern is still bullish, and you're just in a corrective phase. Now, we think long term that's not going to be the case. We think this zone will give way, but it may not give way right away. You may get some kind of a consolidation rally. You may get some kind of a short covering rally here to run shorts out. On the other hand, we think the big picture. We showed you this last week, and this is what bears watching. Let's take a look at the monthly futures chart, and here's where you see the potential for all the room on the downside. So we're looking at just above 110 down below, probably even 110 itself. It's got to get through 120, of course, before it can get to 110. But so we think that longer term, from a little bit longer term perspective, looking on into 2015, we think we'll see 120. As always, though, you have to be careful of getting shook. It's not going to go straight away. It's not going to go there straight away, and we don't see a short covering rally here as a danger. We see it as an opportunity to put more shorts on. So if you do get some kind of a short covering rally and you're holding your short euro as a long-term position, get stubborn and consider adding to that position. So we would look forward to certainly continued lower prices, but at the same time, we're not going to shy away from a rally too, because that'll be an opportunity to increase your short position or take advantage of it as a trader too when it turns south, and hang on to some of those positions and manage them on a higher time frame too. So euro US dollar, short term we still think there's some room on the downside. Intermediate term, we wouldn't mind seeing a corrective rally here. Not sure if that's wishful thinking or not, but the big picture long term, obviously you want to hold long term shorts, continue to look to sell rallies in the euro US dollar. Gold market. Gold's a commodity too. We're going to do a separate report for commodities. Commodities are so influential, particularly right now. When you look at them, and we'll cover that in a commodity forecast also. But gold, it looks like there's nothing but downside here. You took out that lower low. When you look at the big picture here, it's hard to think it's going to do anything but test 112 and probably slice below that. So we think $1,000 an ounce is in the cards. Last market we'll cover will be dollar yen. Here it is, and we were calling for 108 for a long time, and then we said, well, if you see 108, you're probably going to see 110 just based on the momentum, and there you go. Not much to say about that. Hopefully you took advantage of that and you held on to your longs, because that market played out pretty good. Hey, thank you so much. My name is Jay Norris. I'll leave you with these words of wisdom here. Harmony between market behavior and your mindset is key to trading happiness. That is so true. You really need to think in terms of how markets move. If you find yourself perplexed by market movement, or if you find yourself reading news stories that tend to dovetail with what you already think, then you really need to rethink things yourself, and you need to back it up, and you need to figure out what you need to do to get in harmony with that market behavior. The way you think should be aligned with how markets move. Okay, you should be right more than you should be wrong, essentially. Okay, hey, thank you so much. My name is Jay Norris, and we'll see you next time.